Hello everyone, this is Manoj M from Market Ideas for Profit, and what I'm trying to do here is analyze the Nifty chart, the Nifty spot chart using the fair value gaps. Now, this is a beautiful concept. It gives you an understanding where the market is headed to, and it can be used to decide your bias as to where you think the market is going. We'll do a top-down analysis, and we'll use the monthly charts to start with, and work our way down to the lower time frame charts to then find out the micro picture. So let's look at the macro picture first. And looking at this chart, I'll identify the first monthly fair value gap that we're having here. And this is the first monthly fair value gap that comes to mind on the bullish side. So this is the fair value gap, which is standing tall on the bullish side. And this is what we see as something that is supporting the markets as of now. And so we are somewhere around, so I'm going to mark this level as our proximal line on the fair value gap, which is 23,880 odd. This is the monthly fair value gap. So we're going to mark it here as monthly. So what you're going to do here is we are going to go to the settings tab and we are going to mark this as monthly. We'll convert the color to black. And what you're going to get here is a mark out here, which says the monthly fair value gap proximal line. Now, what we see here is there's no other fair value gap on the lower end. No, there's none on the monthly side. So now we're going to go down to the weekly and see what is the situation there. And what we find here is there's another fair value gap here, which is what is in force on the weekly. So again, we're going to do the same process. We are going to mark it down and we're going to say that this is a weekly fair value gap. I'm so sorry. We're going to just put it down as a weekly fair value gap proximal line. So this is as far as the monthly goes. This is as far as the weekly goes. Now, what we also find here is there was one weekly fair value gap, which is created here. And since this is already taken away, the fair value gap is taken away, this is no longer showing on the right. That means that this fair value gap has been mitigated. Mitigated meaning it has been broken. The price went up and the price went back down again. And this is what tells you that this fair value gap was taken away. And to add to this, now what we also see is there is a fair value gap creation right here, which is a bearish fair value gap. So when we do a bearish fair value gap, we mark it in the red. This is a bearish fair value gap. And this is the proximal line on the bearish fair value gap. We're going to mark this as BRFVG weekly. That's what we're going to mark it as. So you know what's happening. So now what is happening here is that we're seeing that the price, there was a fair value gap creation on the long side, on the bullish side, and that was negated by a move down by the Nifty. This was the week ending 30th of September, and we came down and we created a fair value gap here. And you see, in the last 2 weeks, every time the price has pushed to this particular level, last week the price was pushed to this particular level, 25,200, and we faced a rejection there, and we came down. What does this tell us? This tells us that there is a reversal taking place in the Nifty. And this reversal has taken form in this particular reversal format, reversal pattern, which we call the reversal pattern using the fair value gaps. What we see here as this particular fair value gap, it is coined as a manipulative fair value gap, because what happens is before the prices are pushed down, the market makers create an area of manipulation where they induce people to become bullish, and they make them buy in that level, and then they create this bearish fair value gap, which is then the distribution part of the equation. So here they start to distribute, and what you should understand is that this is on a higher time frame. So this all happens with a plan, and this happens over a period of time. It doesn't happen in a day or two. So it has taken about 3, 4, 5, 6 weeks to get this action going on in the markets. Now let's drill down to a daily and see what's happening there. So we're going to go down to on the daily. I'm going to just switch this off here. So what's happening on the daily? What you see immediately in the immediate vicinity, what we see is, I'm going to go from the right to the left, moving to the top. I see a fair value gap, a bearish fair value gap developing here. A bearish fair value developing here. And this is my sign. This is my proximal line for this. Again, we're going to do the same exercise. We're going to, I keep on pressing this tab. I'm going to use the setting tab, and this is the BRFVG daily. What I mean by BRFVG is this is a bearish fair value gap, which is a bearish fair value gap, which is pointing on the bearish side. This is something that we've seen. What else? Did we see anything more on the top here? Yeah, we saw something more on the top here. So what we have are two more bearish fair value gaps on the lower time frame. This is one. I'm not going to mark this because this is too far at the moment. And we have one more, which is this one. These are all fair value gaps pointing in the downward direction. So if you see, the market has been facing some downward direction in the last few days, and it's showing on in the index movement down. So there's a back-to-back fair value gap creation, and there's a small one here. Now what happens is, what do we expect? Let's go down to a smaller time, even smaller time frame, and see what's happening. So let's go to a 1 hour and see what's in store on the 1 hour. Now there is, let's see if there's a fair value gap here. Yes, there is a small fair value gap here, but seems to be have mitigated, not completely, but slightly. There's one more fair value gap here. And if you see, this one also has been giving a rejection. So we have encountered this particular fair value gap once, and we faced rejection. So this looks like it is consumed 50% of the way. So this particular fair value gap, which is situated at 25, 153, 154 proximal, has been taken away. We can say that this has been taken away. Now this area is the weekly fair value gap, and what you're seeing is this is a confluence fair value gap where there is a weekly and a daily confluencing right in that area. So now let's go to a 1 hour fair value, 1 hour chart, and see what's happening there. This is a 1 hour chart. We'll go a little bit deeper into the 1 hour chart. And like this I pointed was the daily fair value gap here. It's a very small area when you looked at the daily, but now you can see that on the 1 hour, it's a pretty decent fair value gap. This is on the 1 hour. I'm not going to mark it because we're going to encounter this for our trading. What else can we see? We see one more fair value gap here, which is on the downside. Again, this is another one that we see, which has not been mitigated yet. So we have, this one is partially in on the Friday's move. And this is the one that has not yet been tagged. Has it been tagged? It has not been tagged as yet. If you see, we have not gone into the fair value gap as yet. The fair value gap is the creation of the gap between this candle and the high of this candle. So this level has not been mitigated yet, or has it been? Let me check. That high on this is 25.097.55. You see the highs here. 25.097.65, and what is you getting here? 25.093. So it has not been mitigated. We haven't touched it as yet. So this could be something that we could target. Now let's go up and see what's more on the hourly. On the hourly, you have some more fair value gaps here. This is nearly confluencing. If you see how beautifully the price moved directly from this particular level. This particular level has not been touched as yet. So what is this level? This level is 25.123. We haven't touched this level. This again is an hourly fair value gap. So we have two hourly fair value gaps on top. which have not been mitigated. Now, what can happen tomorrow using this theory is what we'll try to assess. So my move is that if we move above this level was 20, this level is 24,890. We could move up and go right up here to 25,122. But what you also see is there is this particular gap here. So I would consider this zone, this particular zone, as my zone where I think we will face a reversal. I'm going to mark this in orange for a change. I'm going to mark this in orange. This is the area between 25,254 and 25,040 from where we could see a reversal back to the lower end of the market, because on the higher time frame, there is a reversal pattern that is showing up. And this is what I see. So what's the setup for me on this? And remember, these are spot charts. These are not the futures charts. I'll repeat myself. This is not the futures chart. And this is how I will assess what's happening. So this is the formation of my setup. I will start trying to get into a trade somewhere around here, keeping my stop loss somewhere a little bit higher, using some wriggle room on the top. And this is what is going to be my template for taking a short on the Nifty, which will be a risk reward efficient setup. And what is it going to be? My entry on the short side will be 25,060. My stop loss will stand to 25,313. So that's about 320 point. This is a swing trade. This is not an intraday trade. So this is about 280 points. And what is my target? My target would be somewhere around 24,528. So what is the risk reward that I get? I get a risk reward of 2.06, wherein my risk is 256 points and my reward is 528 points. Guys, this is the setup that I see in the Nifty using this concept of fair value gaps, using the concept of coming down from the higher time frame to the lower time frame, deciding on where the market is likely to go and what are the barriers it's going to face, and from where we could see the reversals happening. Now, there's one little thing that I can also help you with to find out how you should check the reversals. So having said, you can take a note of the setup and we'll see how it plays out. What are we going to do is we're going to put an alert here. So I'm going to use this line and I'm going to put up an alert as the price moves up. I'll see it operate within this week. So let's put it as 26th. It should happen before that. I'm going to just set up my alerts and I'm going to say short trigger check. So I'm going to check. I'm not going to go short straight away. I'm just going to check on, and this is a 1 hour chart. As soon as this happens, I'll get an alert and I will start thinking about this as it goes. Now, what I'm going to do is also to help you get a little bit of an idea as to how you can trade the reversal setups. It was evident. We discussed this in this video itself. So I'm going to use a little drawing tool to give me some idea. So what's going to happen is, like I told you, we will have a green candle going up. So this will be a green candle and we'll have it. This will be a bullish candle which will go up. And then what you'll see on the top, this is the kind of reversals that usually happen. We're going to see a doji candle forming somewhere around on the top above this candle. Above this candle, you feel doji candle happening. And then you will get another candle which will be a red candle. Now, this could be one candle, this could be multiple candles, small candles, but essentially, I'll tell you what it will show you. This will be the red candle, and then you will have another candle, which will be, again, a red or a blue, doesn't matter, which will be somewhere like this. And you will have one more candle, which will be something of this kind happening below this candle. So this will be a pattern that you will see. Now again, this is a concept of fair value gap. Let's take a little bit of a, so we have a wick here. Maybe we have a wick here. I'm going to draw one more wick here. So maybe we have a wick here. We have a wick here. I mean, wicks are a part of the candlesticks, no doubt about that. And then we can have a wick here, whatever. So what happens is, what is the creation of fair value gap? Now, obviously, you need to understand fair value gap in depth, and I have some videos on that. But the fair value gap is essentially a three candle formation where the top of the first candle, in the case of bullish fair value, bullish moment of pricing, the, the gap between the top of the first candle and the low of the third candle, this forms a fair value gap. So this is what is a fair value gap. Now, because this is a bullish fair value gap, I generally convert this into a blue color, and that's what gives me the bullish fair value gap. Now, what you're seeing here is that we have, say a wick here on top here, and like all candles, we do have wicks. So I'm just going to try and make it as realistic as possible. What happens here is that the top of the first candle, the bottom of the first candle, and the top of the third candle, the gap that shows up there is the bearish fair value gap. So when the prices go up and this gap is created, this is called a bullish fair value gap. When the prices come down and there's a gap between the bottom of the first candle, the top candle, it's a three candle formation, like I told you. One candle, the first candle is the base candle, the second is the expansion candle, and third is the consolidation candle or the breakaway candle. The gap between the bottom of the top first candle and the high of the third candle creates a, if it creates a gap, it is called a fair value gap. Now, this movement that you see here is what is called a sharp turn. So what is happening here is the price is going up and then it is pushed back down. Now, this is a reversal pattern, and this is what is called a sharp turn. And this is how the formation is going to be. Now, you're going to see this formation. Now, let me go back and show you this formation on the weekly. Now, let's go. This is the weekly, right? Let's go and see what's happened in the weekly. The drawings that I made right now will become very evident to you. You see this movement. We went up. We created a manipulation gap is what I showed you. And then we went down. We created this particular gap, which is the fair value gap on the bottom side. This is the kind of sharp turn that we saw when we took a U-turn on the Nifty on the top. Now, this is on a weekly candle. You will see a similar movement. You will see a similar movement. Let me go to the 4-hour or maybe the 1 hour like we went before. You'll see a similar movement when you go and watch what I did here on top somewhere. Where did I do it? Let's go. I made that drawing, did it? You saw it, right? We made that drawing on the top here. Yes, exactly. This is where we go. So what you saw here is a similar formation. Now you will see the similar formation on a 5-minute candle chart. Once you see that on a 5-minute candle chart, the only caveat here is because it's a smaller time frame, what we do is we wait for this formation to happen, and then we try and see one more formation back to back in the subsequent trading, giving you a similar fair value gap on the bearish side, and that's when we get into a trade. So the moment we see this fair value gap helping create the next one with its downward pressure, so when the second fair value gap is made in a similar way, you start taking your trade here with using this portion as your entry, this the swing high as your stop loss, just above the swing high, so you have some wiggle room, and then you take a 1:2, and that becomes the setup of your trade. So I hope I've been able to convey to you how we can plan a short in any stock, any chart, using this concept of fair value gap. Now, see here, I'm not using any indicators. I'm not using anything. All that I'm using is fair value gaps, and which is something that is evident on the screen. It's not something that is subject to you looking at it a different way and me looking at it a different way. It's going to be the same for everyone. It's so easy to identify and see on the chart and then execute on it. Do some back testing, see these formations as I've shown you on this particular chart, and see for yourself if these work. And if they work, come back and take a few trades on paper on this concept and see if they work for you. I'm sure you'll find this absolutely amazing. This is what I see on the Nifty in the coming period, and I've tried to explain my concept of using the fair value gaps to understand my direction, my bias on where the market is going, and use areas of fair value gaps as supports and resistances, and also as targets, and score from the market. That's all for this video, guys. If you like the video or if you like the concept, go back test it and convince yourself that it works. And if it does, come back for more on this channel, because I keep on bringing you more such insights on the concept of fair value gaps, imbalances, and yes, the culmination, the combination of volume and price in trading. These are the subjects that I love. These are the subjects that I research on a daily basis. These are the subjects that I use to do my trading, and these form the basis of everything that I do on the charts. So if you wish to thank me for whatever I'm giving you here, please give me a like on this video, subscribe to my channel, and yeah, share it. Share it with more people, and comment if you like the way I've described the entire setup with you. And if you want to know more about it, again, comment about what kind of a video and what more explanation do you want on this particular subject, and I'll be more than happy to make a video and share it with you. That's it for this video, guys. Thank you. Look forward to being with you guys again. Bye-bye, and all the best with your trading on a regular basis. Thank you.